Alrighty, well, I want to thank everybody to the Solivita insurance budget update meeting this morning. My name is Mandy Morgan. I'm the Chief Operating Officer for Evergreen. On the call today, we also have Craig Carmichael. Some of you that have been in Solivita for a while will remember Craig. He is our CEO. We also have Rudy Batista. He is your current community manager. He's on the call as well. And then we have joining us Phil Massey. He is our insurance broker with Assured Partners here in Central Florida. Phil has been our broker for many years and has been involved in the insurance for Solivita for many years as well. So I am going to turn over to Phil for him to update you on where we are with the insurance and the reasons why we've had to look at amending the budget, and the Q&A did go back out to the community. What I'm going to ask, if anybody has questions, if they can please type them into the chat feature, and then we will open it up for the Q&A once Phil's had his opportunity to present to you. But please bear with us. There is currently, we have over 144 participants, so the chat may get a little bit busy. We'll do our best to answer most of those questions today, but I will be downloading that chat, and then we'll get additional questions that may not get answered out to the community as soon as possible. So Phil, everybody else, if they can please keep their lines muted, and I will pass over to Phil.
Perfect. Thank you, Mandy. Well, if you see my name on the screen, it says Nagar Sharifi, but that's actually my partner here in the office. I got delivered a new computer on Monday, and it's been a little finicky this week, and I tried to log here into the meeting and ran into some trouble. So now I'm in her office, so I'm sitting in here, which is not that big of a deal. But I figured what I do is just open this up and give you guys some background so the 150 plus people on this call kind of get caught up to speed, if you will, in the last 6 or so years that we've been involved at Solivita. And then it probably will answer a lot of your general questions. And then if there's questions at the end, obviously we'll go through it. I will start just giving a quick description for myself, my background, since a lot of you are meeting me for the first time. So I've been the agent at Solivita since 2016. So 2021 was our 6th renewal that we were in charge of as the agent for Solivita. I am also the agent for give or take about 500 community associations around the state of Florida, the majority of those being larger condo associations or larger community associations, HOAs, like Solivita or Bella Lago, or, you know, Association Poinciana Villages. I mean, we do the majority of them. So my partner Nagar and I have a staff of 16 here in Orlando. We represent community associations throughout the state. I also have my CIRMS designation, as well as my partner, which stands for Community Insurance Risk Management Specialist. There's only 8 of us in the state of Florida and about 100 around the country. I sit on 4 large condo boards in Central Florida. I attend 150 plus board meetings a year, and just have lived and breathed this for the last 16 years of my career. So again, our team is Community Association Insurance Specialist. So my hope is I'd be able to answer the majority of any questions you guys all have here. So a quick background on Solivita. If you go back to the 6 years ago when I first got involved, the agent before me was out of, I think it was Arizona or another state, and there were things that were done incorrectly, and we came in and cleaned them up. But the association's real problem, or the thing that's distinguished Solivita from your average association, obviously it's sizable, so you don't see that many associations, 5,500 plus units, but there are, some out there that are. But the issue that's kind of stuck Solivita out there has been the claim history. And just so everyone on this phone knows what that means, or on this call, when the association has, which is the majority at Solivita, has been trip and fall related claims, but any bodily injury or property damage that occurs to a third party, so a guest, an owner, anybody in the public that hurts themselves on your property, that then brings suit against the association looking for damages, whether those be medical bills and pain and suffering, or whatever the deal might be. We absolutely, in my business, if you look at our situation right now, the 500 communities we have, got about 400 open liability claims. So we live and breathe this daily. I teach several CEU courses, one of them on claims, slip and fall claims in particular. So it's something where we see. But at Solivita, you guys had I want to say it's unlucky. I mean, it's just for whatever reason, and we'll get into some of that when we get into this call. I mean, you guys have had an out of ordinary, inordinary, what do you want to say, amount of claims. Now, granted, there's a lot of people, but I think what's different about Solivita has been the degree of injury that some of these people have suffered. So we see trip and falls from time to time, and, you know, someone's scraped up and trying to make a claim that maybe isn't legitimate. But what we've had at Solivita is we've had a lot of these slip and falls that have resulted in significant bodily injury. So we've got broken femurs on here, we've got broken hips, we've got just significant injuries that lead to significant medical bills as well. Some of that to me is a little, you know, obviously it's unusual because the majority of these claims are trip and falls over what is really a slight raise in the concrete. So it's hard to imagine, right? When someone trips and falls, you would think, okay, they get scraped up, maybe they get injured. We got some of these claims well over $100,000, $200,000 in premium and payouts. So over this last 5 years, which we look back on a 5-year loss history, you guys have had 30 claims or 30 incidents that have occurred, and they've accumulated just about $1 million in insured losses over this time. And so just so you guys know, so the carriers have paid about $1 million and 900 or so thousand in incurred losses. This is all as of May, by the way, because that's when the renewal date was on May 1st. And the association, if you look at what you've paid in over that time, you're talking about if you kind of do the math on it, I put it in my email that I sent out to you guys, but let's say it's a quarter of that, $250,000. So the association's paid in liability costs that are, you know, basically a fourth of what the carriers incurred losses for. So anybody that does, you know, easy math on that, or in our world, in the insurance world, the carriers typically start losing money once they pay out more than 40% of their premium they collect in any given year, because they've got expenses too. They've got, you know, their obviously investigation expenses. They've got the payroll and lights and structure and commissions and everything else that they pay. But in your case, you're at, you know, whatever that is, 400% loss ratio. So we're well blowing out the 40%. So it's pretty basic math when it comes to increasing rates. The carriers need to get a rate that they feel is going to make the account profitable. And so in your case, when you look at that loss history, and this was something that did not sneak up on us. I mean, if you look at all the renewal proposals we put out there, all the communication over the last 5 years, it has been, man, we've had a really bad year this year. We're to try to get this better, try to do this and that. And we'll talk about some of the things we did. But when the stuff keeps happening, the carriers, you start losing markets that are willing to do it. And obviously the carriers that non-renew because they've, you know, lost money or the account's got loss ratios that are unacceptable for them to insure. And you basically get stuck in a position this year where nobody wants the account. And we have to, you know, we're paying exorbitant amounts of premium in comparison to what we paid in the past in order to get coverage bound. And so that's really where we ended up in 2021. And it's not that it hadn't increased over the years, it had, but you know, the other side of this coin is kind of unrelated to Solivita. Anybody that's turned on the news has seen there's been significant insurance pressures in the state of Florida. We've had a run on liability issues in our state. So, and I mentioned some of this in our call too, but the way these claims are getting handled. So people in the past, if you look at someone who tripped and fell, and I've been doing this 15 years, you go back 10 years ago, it was odd to see somebody make a claim, let alone that claim settle for more than say 10 or 15 grand. And when someone would fall and they'd settle for that much, we used to get all upset. I was like, 10 grand, 15, what did they do for that? Now we see trip and falls and it's like immediate reserve settlements, you know, they're $100,000, 50 to 100, 150, 200. Had one the other day, not at Solivita, but it was a trip and fall that settled for $340,000. Those are crazy numbers. And reason that is happening is more, is a larger issue than Solivita, and it's happening everywhere. But you've got insurance carriers that do not want to go to court on these issues. And if someone has legitimate medical bills from something and they're lawyered up, so they are suing the association, the carrier doesn't want to end up going to court because the chances of the jury siding with an insurance carrier over an injured claimant is very rare. It's small, it doesn't happen. So they think they're going to open themselves up to much larger potential costs. So the carriers will end up settling these amounts, and the settlement amounts have just steadily gone up over the years. So we've had rate increase in every community association. That is not unique to Solivita. It's just Solivita, what's unique about them is the claim history that you've had has kind of supercharged that rate increase and inflated that cost. Now, again, if you didn't know anything, if everybody on this call knew nothing and you were just trying to come up with a premium that you should charge Solivita for their insurance, and you looked at the claim history, the premium you're paying right now is, probably pretty commiserate with that. It's just when you know the history of the premiums, it just looks real bad in comparison. So, so I just said a bunch of things, I know, but I know there's a lot of people on here. Do you want me to read the chat, Mandy, or do you want to ask me the questions that you want me to address?
Yeah, I'll start going through them if you like, Phil. So
Sure.
it saves you having to do multiple screens. And some of them are going to be duplicates. So please know,
Sure.
I'm not going to read out every single one if there are duplicates. But we're going to start at the top. So, I think you've covered some of these already, but let's just, reiterate them. What types of claims are we having and who are making those claims?
Sure. So the claims almost entirely, if you look at all 30 of them, almost the vast majority are versions of slip and trip and falls. Majority are trip and falls over concrete, being like where the concrete attaches. And this, again, is not anybody on this call's fault. And it's something that we see at a lot of associations. Developers, when they come in and build a community, they usually clear the ground, right? And then they're required to put in certain amount of trees per the city codes and everything else. And they end up doing these trees that line sidewalked areas that when the communities are brand new, it's like, oh, this looks pretty and fine. But as those trees mature, they almost in every scenario are lifting up parts of these sidewalk areas. When they do lift up the sidewalk areas, it does create a potential trip hazard. And so in Solivita's case, where there's so much sidewalk in the community that the association is responsible for, those have been the areas where people have tripped and fall. And then instead of tripping and falling over, I'm telling you, you're talking about anything over a quarter inch, can be potentially a trip hazard. So you're not talking about a big piece, and a piece that probably many of you walk over without any issue, but you start adding into that people that might have other issues that relate to them, falling. We've had people jogging and running and falling. Again, a lot of it is odd to me when I look at it, because I'm just like, how'd somebody get that injured over tripping over that? But it happens. And so now what's unique is it happens, and then they go to Morgan & Morgan. You guys see the ads, and then they bring suit really against themselves. So some of these people are owners at Solivita that are suing the association, which they are a part of. Again, that may seem crazy to some people that are on this call, but that is what has become common practice out there. Other of these people may be guests of that individual that are over, but I would say the majority are owners or renters within Solivita.
Okay, next question, either Craig or Rudy, you might want to take this one. So they're asking about what precautions that we are taking as an association. And I know that Rudy can attest to the budget. We did have quite a large amount in the budget. We had some in reserves, but to do the entire community in one go, we are looking at many millions of dollars to spend. But Rudy, can you just go through what's been spent so far this year? And what the projections are for the rent? I think we've pretty much spent most of this year's budget, but if you can just bring people up to speed.
Sure. As of right now, I'm around 40,000 that I've spent from our operating budget for the sidewalks. We do have a contractor in right now working in the Flora Vista and Capri section. Some areas which some of you residents have reached out to me and have confirmed, and even asked questions, why do you have cones set up instead of just marking the little lip on the sidewalk with orange paint? Well, the cones, they're more obvious and they stand out more. We try to make it as obvious as possible, so that way pedestrians can avoid it as much as possible. And the vendor's working hard right now. He's out there grinding areas as well too. Some areas where the lift is not that extreme, we do grind down the actual concrete sections where the stress cracks are at. This is to help extend that budget further out, so we can make more of those repairs. So again, right now we're around 40,000 that I've used up, and within, he's still working out there, which you guys can attest to. You guys see the cones, you guys see the caution tape out there where he has roped off and poured new actual concrete. So we're still doing more. We still have more going down next week as well. So we're still in the middle of that progress.
Yeah, and I'll add to what Rudy just put in there is that we've since 2011, so we're looking at about 10 years. I know some years we spent almost up to $500,000 doing concrete and sidewalk repairs. I think our lowest year that I know of was probably last couple of years, but it was like 150, 200,000. But we've put in, Rudy, I think if we could do this too over the last, take our financials from AM and even Evergreen and just show what we spent on concrete repairs over the last 10 years and share that with the community. It's an ongoing issue. It will always be there because those oak trees that Phil talked about that line the streets, that was by county code. That's Polk County. That is mandatory that there's street trees. So, and then when they put the sidewalks there, that's what's lifting them. So it's a battle. We've tried barriers. We've tried everything. Landscape committee's been heavily involved in it, right, Rudy, over the years, working on solutions for it. But at the end of the day, it's just going to happen. You just got to keep on top of it, which we do inspections, multiple times a year with our crews out there trying to find any sidewalk that's raised. But like I said, to Phil's point, even a half an inch or even a quarter of an inch, people are tripping on that and filing claims against the association.
Yeah, and so what I would say to add to that too, when people ask about the cones, they're like, well, why is there cones here? It looks bad. And I don't disagree. And we've got it in my community and there's cones up and it just kind of looks frustrating. But the reason that's there is that when you spray the orange paint on the area where the trip hazard could be, that's great during the day. But what we've actually seen, even at Solivita, we've had these claims is people running in the evening hours or in the early morning hours where the sun's not up and they don't see the paint. You'll see a cone, right? So that's why the cone's there. And again, I know a lot of people in this college be like, it's insane, but that's what's happening. So, I mean, you're getting large claims from people running and falling basically when the weather or the lighting isn't as great because they're jogging at night. So, or in the early evening or early morning. So that's why the cones or caution tape will go up in certain scenarios. So yeah. And again, this is an ongoing battle, like Craig and Rudy mentioned. It is not a community like Solivita. It is just fundamental to you. It's such a huge community. There's so many miles of sidewalk. All of them are degrading at the same time because of the age of the community and the age of these trees. And then you've just got thousands of people walking on them. So, I mean, to some extent, it's impossible to eliminate, but it's an ongoing battle and it's expensive.
All righty. Next question is, can the insurance assessment be paid in a single payment? Yes, it can. Right now, the budget is calling for $12.58 a month from August through the end of the year. It will be showing on your account as a separate assessment on top of your regular HOA assessment. But if you wish to pay it all in one go, you can. And then it'll just show as a credit for a little while. But if you wish to pay it all in one go, you absolutely can do that. Someone's saying, without disclosing the individual names or injuries occurred, can you share the specific locations? There are so many within the community to share the specifics. I mean, we need to pull out every history, but it really is community wide. It goes throughout the community and, the main village drive, it really goes out throughout everywhere. So there's no one area that is more susceptible to this than any other.
One thing I will add there, Mandy, because this was something that in case somebody was wondering or if they weren't, but the Bella Lago or the Solivita Club that you guys have has its own insurance so that any trip and falls occurring on the club property are handled by the club and the developer and that piece. It's not polluting your policy. So just in case anybody was wondering about that has also been handled as a few years ago.
Yeah, and sorry, Craig, just to follow up on that, the club does have its own standalone general liability policy, which we actually had the developer add 2 years ago. Obviously all of the property is under the Avatar name and they self-insure that, but for liability, we do have our own standalone policy. So just to top on that, was that what you were going to say, Craig?
Yeah, that, and also just for legal, so people understand, the streets are all owned by the HOA throughout Solivita. The sidewalks around the clubs and the amenities, anything within that amenity from basically curb back is the club. So if someone would trip on those sidewalks around the amenities, that's going under the club insurance. If they would fall in the street, then that would go under the HOA. So just clarification for that. And that's all.
I'm sorry. I was going to say, even in prior years, just in case anybody was wondering this too, there's a lot of people on this call, before the club insurance was in place, the association still wasn't taking those claims. The developer was, but it just makes it cleaner now that there's insurance policy in place.
Yeah.
Right. Also
so
saw
someone-
a comment, Mandy, I saw a comment real quick just on the street trees. We were talking about that. Someone said, can we just remove them all? You can't per county code. We've already tried that. That was one of our solutions. We looked at different types of trees, less root aggressive trees. And we're basically, there's a small list that we get to use, and they're still aggressive roots. I know Rudy and the team has looked at, landscape committees looked into that too as well.
Alrighty, so it's saying, please confirm the policy costs went from 120 to 762. And they actually, I know there was a
I can-
spreadsheet fill on that. You got that?
So the numbers from this year went from 116 to 522. So that was the premium increase between 2020 and 21. I mean, prior to that, it was pretty consistent between 20 and 2018. So 2018 was about 91, then it went to 105, then it went to 116, and then the big jump happened between 2020 and this last renewal here in 2021. We went from 116 to 522. But just to break that down, only 2 lines of coverage actually changed. So I'm looking to the left here because I've got a screen over there. The property coverage basically is identical. The crime coverage is basically identical. The directors and officers is basically identical. You've not had D&O related claims, which is good. It's a very small percentage of the overall premium. Pollution's been fine. Work comp's been fine. The 2 lines that have been impacted is the general liability, which is paying all of the slip and fall bodily injury claims. That went from 90 grand to 340 grand. That was the big jump. But the really crazy jump is in the excess coverage. A lot of people don't think about that, but the $5 million umbrella the association has in place went from only $6,600. That's all they were charging, which is well below market in 2020, to $158,000. And the reason for that is that with this claim history, the umbrella market for community associations has tightened considerably. And they're now looking at any claims over 50 grand. They won't insure an association. Every carrier's got different thresholds, but you guys blew through all of them. And so we ended up outside of what's called a risk purchasing group, like the cheap discounted umbrellas we can buy for community associations. You guys are in like the open market world, and it's all run off what the underlying coverage is. So in your case, the underlying general liability is 340 grand. You're no longer going to be able to buy a $6,000 umbrella. I mean, the umbrella is going to be basically, in this case, 40% of that cost to get $5 million in additional coverage with this claim history. So those were the 2 lines that went up. But again, based on the claim history, it's more than supported when you look at that, if you're looking at it from a carrier perspective.
Alrighty, so a couple of these ones I'm gonna go through. So they're talking about the total cost for repairs. Rudy's gonna work on getting you over the last 5 years what's been spent on repairs for sidewalks. Question is, how can we bring the policy cost down? That's simple. Lessen the number of claims that we have.
And we've got kind of
drops.
thoughts on that, which we've talked about, right? So the first thing, and this has been going on for years, has been to aggressively put incident reports together. We have tailored incident reports that we've created for our clients. Evergreen and Solivita have those. The management, when someone does report an incident, it is thoroughly investigated. We've got photos and pictures and background and witness statements. So having all that helps in the event that a suit does come of that. So that's step one, and we've been doing that. The problem is not everything gets reported, right? Like 6 months goes by and a lawsuit comes in. No one's even told us they fell. So that's just a part of the overall problem we deal with in community associations. But at least the stuff we know about, they're doing thorough investigations with the incident piece. So that's one. The second thing is proactive approaches, doing inspections, spray painting the areas that are found and then re-spray painting them before they fade away, and getting the work done as quickly as possible, adding the caution tape, adding the cones, trying to prevent the trip and falls, because that is our main issue, right? So it's hand in hand. It's investigation when claims get reported. It's preventative measures to prevent them from happening. Long-term solutions, obviously, like Craig was mentioned, looking into potentially changing landscapes, doing different stuff. Those are things that are currently and have been happening over the years. What the association needs, you guys as 140 people that are on this call, there needs to be some sense of community to the people that are putting in some of these claims, because not every claim is like, some of it can be very suspect, right? But they look at it like, hey, I fell and I was injured. I'm calling an attorney and I'm taking the association to court and I'm trying to get as much money as I can. That unfortunately has become just a way things are going at a lot of places, but it just seems at Solivita, it's just very quick to the draw on that. And, unfortunately, it's not the stigma maybe that it used to be, but that's part of the community and why we're getting this word out and having meetings like this. So maybe when people see an issue, they say, you know what, I'm going to tell my community manager about this potential trip and fall hazard, let them know so that they can potentially address it. But I'm also going to be more cognizant myself when I'm walking or running or anything else, that these things are there so I don't fall. And then obviously if you do fall and you are injured, and potentially trying to resolve that without legal dispute. But again, it's tough to require.
All righty, they're coming in thick and fast, so I'm going to try and run through a few of them. So who is the community risk manager? So Rudy's job as your community manager is to do the inspections in the community, and he works closely with his director of site services as well, and they go out into the community. We also have homeowners actually let us know if they see something as well. There are well over 60 miles of sidewalks within the community, so that's a lot. Can we put up cameras? We have cameras in the main club areas, but to put cameras up on every sidewalk in the community would be a huge cost. Could it be done? Yes, but it's the cost associated with that. Is there a way to limit the general liability trip and falls? Hopefully, yes, if people stop making claims. Does the association have to approve any settlements with the insurance companies? And Phil can answer this as well, but I've personally sat in on many mediations through the association, and it really does come down to the insurance companies and the attorneys that are involved. And the attorneys make those recommendations for settlement. Do we as the association have any kind of say in it? Once it goes to an insurance claim, it really is out of our hands. To accept that claim, it comes down to the insurance. Phil, can you go over that a little bit more detail?
No, that's accurate. The association cannot deny, like, let's say you're not happy with the settlement the insurance carrier wants to do to get out of the claim. The association can't deny the ability of the carrier to settle. The carrier, once the claim goes to their side, they're legal, they're running those metrics, right? That if they're going to settle a claim, it's because they believe it costs them less to settle it than it would to fight it in court. I will tell you the majority of claims are settled. It's not unusual for that to happen. And it also isn't unusual for boards, and I sit on four boards, or owners to be, thinking that it was settled for more than it should be. And I get that. But there's so many other things happening behind the scenes that you're kind of not seeing on a daily basis, but it's just not the board's call. Now, the directors and officers policy, there are hammer clauses. There's these different things where you can deny a settlement and the board takes the responsibility of X amount of the additional costs, but that is not the case on a general liability policy.
All right. Couple of questions. So it's saying the premiums that were saved during COVID. I think we've been over this. There was a lot of maintenance done throughout the COVID lockdown. So the association money was still spent in the community. So there really wasn't any savings during that lockdown.
And Mandy, I think they get confused. That's the club side. This is HOA. Yeah, HOA is just basically security and taking care of the community streets and sidewalks and landscape. That's it. That's under the HOA.
And what we actually saw, which is kind of funny, if broad scale, when this lockdown happened, we did see less claims from amenities, which again, Solivita doesn't have the amenity structures where you have like individual pools or something like that, where they were closed during the lockdown. People couldn't fall or partial drownings, whatever in them. But we did see an increase in trip and fall claims because everybody was home. So you had all these people now at their community and home every day, and they wanted to get out. So what was the one way you get out? You walk your community, you exercise, you get out of the house. It led to more trip and fall claims. We saw that in other scenarios as well. So the actual insurance cost, and overall from a slip and fall perspective, actually increased from the COVID lockdown, if you will, which a lot of people I don't think about that way.
Yeah, so one question is, can we remove all the sidewalks and just put sod down? What that will do is people will end up walking on the roads. So they'll end up walking in the streets as opposed to actually walking on the sidewalks. So, we've looked at that. There's a mention about the initiation fee for new home resale contribution. That money is already going into the operating fund for the association. So that is additional income. Unfortunately, not enough to cover this insurance increase. A lot more about sidewalks, the mandatory trees. Craig's already addressed that. Unfortunately, the county do still require us to have those. So if we exceed the deductibles, what happens? So I want to just quickly go through this. When we looked at the budget and the two line items that were added to the budget, it was for the increase in the insurance to cover the cost of the premium from now through the end of this year. And then, and Phil's not mentioned it yet, we'll go into more detail, but the deductible that we had on the plan that was in prior to the renewal had a $5,000 deductible. So for each claim that went through to settle, the association was paying $5,000. That actually increased with this renewal, and it increased to $50,000. That's $50,000. So what we've done is we looked at how many significant claims have we had historically. And then we came up with a number that we felt was a good amount to put into a contingency fund to cover any deductible should you have any claims in the 2021-2022 year. Now, there's been questions about, is that fund going to be funded, continuous? I think once there's a buffer in that fund, then that fund could stop being contributed to, but it really does come down to the amount of claims. And Phil, maybe you can just explain a little bit more on the deductible and, again, reasons why that increase was so significant.
Sure. So it just like what I was talking about earlier, the premium increase. Sorry, I don't know what that was. The premium increase.
My Siri.
No, it's fine. The Siri thinks it's me. The premium increase is part of it, but it's also the deductible increase. It's all in ways to keep premium from being crazy high. It's offset by increased, basically in order to get the carrier to do it, they're like, all right, well, you're going to have to take more skin in this game. Plus there's going to be additional cost, right? That's you're kind of in worst case scenario territory now. Without the premiums going up another $200,000, you're taking some of that risk. And the hope is that, or at least from the carrier's eyes, is that the association is going to use, why pay money into a deductible when instead, if you can get money into the funds to prevent there from being claim issues. Now, I know we're already trying to do that, but that's at least the thought process when these things are set up. So what I believe will happen is that hopefully that all that work we've done, we've kind of crested here, right? Like it takes a while. You get sick pretty quick, right? But then to get better, it takes a while. That hopefully we start seeing some improvement with lessening of these claims. Obviously, the deductible being in there will lessen it. Loss runs will hopefully look a little better. They need to get cleaner before we can get better. It's going to take a little while, but I'm hoping that the changes that we've made operationally, plus with this policy, will get us more to that place. So it's obviously you'd love to have continue with a $5,000 deductible, but again, claim history matters, and that's what they're looking at here. And then you've got market impact as well, which is beyond your control. So,
hey, Phil, real quick, can you go through? I got 3 parts. I've seen some of the comments coming through, which are great. That you're not an insurance company, you're a broker, that you go out and you bid the whole market. I saw it as a comment that you're the insurance agent, you're the guy that's writing the insurance. Well, no, he's our broker, Phil's our broker. Go through that bid process, what that looks like each year, what you go through, and then trying to get the best rate for the associations, because that's your job for us with Assured Partners. So go ahead and talk about that a little bit.
Sure. So I am not the insurance carrier. So it's kind of like if you go to a mortgage broker, the broker is working out the deal, but they're not the bank. I mean, obviously you go direct to the bank. In our world, in the insurance world, this association cannot go direct to the insurance carrier. You have to use agents because you don't have direct contracts with all the different carriers that you would need. So we become essential. That's not unique to Solivita. Every association in the state of Florida uses an agent. So there's thousands and thousands of associations. So that's something that you have to do. Now, you don't have to use me. There's other agents you can obviously use, but the weird or unusual thing about our business here, especially in Florida, is that when you use me, we have more insurance carriers that we could go to than any other agent. And we have all the same ones for the most part. So every agent kind of has the same pool of carriers, but the agents that specialize in community associations, which we write more of in Central Florida than anybody else, are going to have obviously more of those tools to use. And so we go out to, maybe it's 100 insurance carriers in general. We'll look at Solivita at their renewal. And if you look at the proposal we provide each year, it goes over a market summary, which shows you just a list, and it's just a snapshot, but a lot of the carriers and what their responses are. And so what you would see in looking at that is that especially for your situation, which you would expect, the high percentage are just straight denials. We're not going to write it, not going to touch it. Loss ratio is not compliant. Where these carriers have reinsurance treaties where they buy insurance, they can't go against their reinsurance treaty and write an account that's running at a 400% loss ratio, right? So a lot of carriers are just out. They won't do it because of the loss history. Then the carriers that would consider it are going to want to get their pound of flesh. So they're throwing out indications. All right, we need 500 grand with a $100,000 deductible to write this. Well, if I already have 340,000 with a $50,000 deductible, why are we considering 500 with 100? You know, so that becomes the process. Any indications that we got were significantly more expensive with significant worse terms than what we actually ended up presenting. And again, I know that sounds crazy because like, well, we took a huge increase. This number sounds nuts. But again, compare it to what you're averaging a year in claims. You're averaging over $200,000 a year in losses. So you got to look at that and you're like, all right, well, we're charging $340,000 on the liability policy that's averaging paying out over $200,000 a year in claims. So it has to make sense in the carrier's mind, and a lot of carriers just won't take the chance. We got lucky, and I know it sounds crazy to say lucky because Solivita is in the situation they are, but we had a carrier, if you go back in the history, used to be with a carrier called Tower Hill. They non-renewed you after 2017 on the general liability. We went to Hiscox for a year, and then they non-renewed you on the general liability. And then we ended up with Cincinnati Cincinnati Insurance Company, which if anybody knows about Cincinnati, it's a very strong Midwestern-based company. They've been around a long time, very good financial rating. They've actually been on the account for the last 2 years, paid a ton in claims, and we're ready to non-renew it and be our third carrier to get rid of us, and as well as the umbrella carrier that non-renewed this year. We fought hard back to Cincinnati to get them to at least give us something because we knew it was going to be so bad in the market to go with your claims and another non-renewal. And so Cincinnati actually agreed, and they came out, and that was not an easy task, but they gave us this number and this deductible. And again, with their terms are good too. There's no weird exclusions on that policy. It's a clean form versus the stuff we had out there. So it actually worked out really well on the general liability side for us to get that. And again, I know just looking at it from your guys' perspective, it may not seem that way, but we stayed with the same carrier in 2020 and 21. That was our renewal. And we were lucky for that because any new carrier that was coming in was just bonkers crazy with what they wanted.
All righty, so lot coming at you thick and fast now. Comment was, why are the homeowners suing the HOA? Is there one insurance or one attorney going after us? Full disclaimer, my last name is Morgan, but there is no relation. But I'm sure that you guys watch TV and you can absolutely know who the insurance, who these attorneys are that are going after the insurance agents.
And if you look at Morgan & Morgan, that's not just the Morgans. I mean, it's a network of attorneys. And so if you look at like Dan Newland, for example, you may think he's his own firm. It's actually Morgan & Morgan. You know, so they're the big bear in the woods. But there's a lot of them. So that's not unique to Morgan & Morgan. I mean, there's a lot of these firms out there that do this. So there's not just one that's coming after you.
Yeah. Question was, can we just have residents sign a waiver that says they don't sue the association? It's in your governing documents, actually, that it does say in your governing documents that as a member, you won't sue your association, but people still do. Even if they've signed the waivers, you sign the waivers to use the club facilities. But even if someone signed a waiver, they still try to sue. So that's there. Somebody asked about.
Well, remember too, it's just because you sign the waiver, there's guests, there's family members that weren't party to the signature. So I mean, there's ways that kind of cracks through anyways, but obviously we try to use that when we can.
Somebody said, is this increase just for this year? The increase, the insurance runs from July 1st of this year, May 1st of this year through to April 30th of next year. I mean, we can ask Phil, what does he expect next year to be? I don't think we anticipated that this year's increase was going to be anywhere near as much as this. But I mean,
well, yeah, you don't budget for this. I mean, like you look at this type of increase, we knew it was going to be bad. I mean, if you look at the email presentation from 2020, I mean, it was not in any uncertain terms. It was like, we are going to get crushed if we don't have some claim reprieve here. It's only a matter of time. We were buying time. 2019 to 2020, for that increase to have only been about 10 grand, despite the claim history, was a reprieve, right? It was coming. It should have been a lot worse. And you really shouldn't have took this increase in 1 year. It should have probably happened earlier, but we were able to keep that at bay. But 2021 was like the straw that broke the camel's back, right? In that renewal. So what's going to happen next year? I think we've already taken the big step. I don't foresee this being something that blows up further unless there's obviously significant claims continue, but will it go back down? And I do think, yes, you're absolutely going to see a decrease at some point, but you're going to need claim history to support that. So what we're trying to do is obviously any open claims, there's 9 of them that have reserves that are sitting out there, trying to get those claims to settle for less than it says they're going to settle for. Sometimes you get lucky, right? Like the carrier looks at injuries, they assume the claim is going to be $100,000 claim. Turns out the people don't end up going forward with their lawsuit. They move out of the country, something happens, and the time goes by and the claim just closes. And we get real lucky. We wash 100 grand off the loss reserves. That happens sometimes, but to predict that is very difficult. But assuming that we stayed, a relatively normal year, I wouldn't think you'd see a generally large increase from where you are now. It's just what's it going to take to get this to go back down? And I think you're going to need to see some of those reserves fall off, and you're going to need to have a better 2021 loss year. It just needs to take time so the carriers look at it again and say, okay, this is an account we can write.
Okay. So a comment was made about Rudy not being a certified insurance inspector. We did have, Cincinnati did send in their own inspector to come in, and they do that when they're doing the bid process. So there has been a representative from the insurance company. They come in every year when they do the renewal and do an inspection on the community.
And again, Cincinnati's thorough with that, but you guys gotta remember, like Mandy said, 60 miles of sidewalks with 1/4 inch, just 1/4 inch, it lifts. I mean, so your problem isn't it's not like there's, assault and batteries happening or elevator problems or pool issues. It's pretty obvious there's one issue. It's just a matter of the size and scope of that issue. It doesn't take a genius to figure out what's happening here. It's just what can you do about it? And the only other thing I'll mention, because we brought this up in other communities, but Craig and Mandy and Rudy would be better to discuss the possibilities of this with your attorney. But we've done at other communities is move the sidewalk responsibility from the association on to the homeowners that are there. It's a lot movement stuff. I cannot tell you that is easy or will be 100% remedy, but in the associations where we've been able to legally change documents to move the responsibility to the unit owner, then the unit owner becomes responsibility to maintain that area. And if someone trips and falls on it, that claim would then go to the unit owner and not the association. That is really the only other angle that I've seen. But again, I cannot tell you that is possible.
Let me jump in on that, Phil. It is so tough in active adult communities, as you know, to burden a homeowner. You're going to have someone that takes care of their sidewalk, and then next door they don't. And then we could be going compliance after them, billing them, and trying to take care of it. It's just a mess. That's why the HOA covers it. I've seen a lot of comments. What's the solution? How do we get past this? Guys, it's something we've been battling from the beginning, and it's every community in Florida that we manage. And we manage, 200, and they're all the same. Where there's street trees, you're going to have that sidewalk lift. We're out there grinding, replacing. Some people said remove sidewalks. Yeah, there's probably areas we can remove sidewalks that probably don't make sense, or the county doesn't require it. That'd be the thing we got to check into. But you're putting people back on the streets, like Mandy said, and they're going to trip and fall in the streets, which is owned by the association. I saw a comment in there. Doesn't the CDD own the streets? No, that's all under the HOA. Streets and sidewalks are under the HOA. The CDD takes care of the water bodies and culverts leading to the water bodies. So street sidewalks are all under the HOA. And as you guys know, we see it all the time. Phil sees it more than we do. People will sue at any point in time if they feel like they can gain some kind of advantage from a financial standpoint. So moving it back into the homeowner's hands, we can get creative about that. I know the association is getting ready to turn over to homeowners. At that point in time, when it does turn over to homeowners, they can look at changing the documents or working with the developer to change some of that verbiage prior to transition. But I wish we had a solution, guys. We've been on this every year doing inspections, highlighting, grinding. I think you'll see one of the years, I think we almost did 700 and something thousand just grinding and concrete repair. to try to keep up with the demand within the community. We caught up, but like Phil said, even a quarter of an inch, just a slight little thing. If they feel like they tripped on it, they're going to sue and they're going to win in court.
Yeah, so couple of other questions. One lady's made a comment here, Phil, and I'm not sure I understand the question, but I'm going to kind of read it. She was an insurance broker, and when the insurance is issued to the association, the homeowners are additional insured, and they weren't able to sue that insurance company. I'm not sure I understand the question, because if you're insured under the policy, you can claim on that policy.
Yeah, no, there shouldn't be any reason.
I mean, if that lady would like to actually email us, I'm not sure I understand that.
Yeah, I mean, anything that we don't answer today or that gets more complicated or something, I have no problem putting it in writing and emailing back if you get to Mandy or Craig or Rudy. So don't feel like if you don't ask it right now, you're not going to get it answered.
I think Craig answered this one. Phil is not the insurance company. Someone mentioned here we should go with Brown & Brown. Actually, Phil was with Brown & Brown when he insured your association a couple of years ago. So he was with that company and he's moved companies.
Yeah, so I worked at Brown & Brown for 11 years
company,
before moving to Assured. But again, it's who specialize. What you definitely don't want to do. I mean, that you want to use an agent that specializes in community associations. It would be insane. Now, I will tell you for the Brown & Brown comment, just to give you an idea here, like the current carrier Cincinnati that you have on the general liability, we didn't have access to them when I was at Brown & Brown, and they still don't. That's only a carrier that Assured Partners had access to. So we were actually able to pick them up as a market, which really helped us. And one of the main reasons why we made the move that we did. So it's trust me, it's not that simple. And then, a lot depends on the background and experience and what the agent can do. And I'll also say, I see these comments too about the cost per unit. If you guys look at the association's cost per unit and, from an HOA perspective, you're running about $93 a year per unit for the association's insurance, which again may sound crazy and outlandish, but it all kind of depends too. It really, $8 a month is what you're currently paying, versus where it was before, which was, maybe it was $2 a month. I mean, I get it, but that is not, if you look at what other communities pay, it's not tremendously off of that. I mean, Bella is about half that, which is a community to kind of give you a size example too. But if you go into your condo worlds where they're buying property insurance on the buildings, I mean, it's very common for them, be paying well $300, $400, $500 a month or a year. I'm sorry, for insurance per unit. So we're still not talking about. I think what cuts through here is that community associations and HOAs, even with just sidewalks, with no amenities, I think we're just so cheap in the past that carriers were writing these things for like $1 a door, for liability coverage. That's what it was like 10 years ago. But that's changed a lot now. And carriers are just not doing it for that price anymore because of like what you said. You write it for $1 a door, you get one trip and fall, it wipes out 20 years of premiums that you've collected. So the carriers have realized that. So costs have increased across the board. It's just Solivitas are basically double what you see because of the claim history, which, I mean, that goes to, hopefully everybody understands that. That's what happens in our world. I mean, the more claims you have, the more the premium is going to be. So there's only so much you can do to prevent that from a cost perspective.
All right, I'm getting to the bottom of them, but they're coming in as fast as we're answering them. Question on who is making the claims? Are vendors claiming against us? And I think I've got the loss run in front of me. I also have all the history. And every claim that we currently have outstanding is a resident of the community. They're not vendors. Vendors have their own workers' comp insurance. They would claim on that. So I don't see any current outstanding claim that is ever a vendor or anybody that doesn't live in the community. A lot more about sidewalks. We're going to go through a lot of these. Lot of talk about the $50,000 deductible, and that if there are 30 claims, you need $1.5 million. If I look at the loss runs over the last 5 years, there's been 3 to 5 claims that have gone through and settled. So that's the number that we took to create that contingency fund based on that 3. If they end up, we get more. Bear in mind, any claim that is currently outstanding is filed against the insurance that was in place at the time of the accident. So we've got one claim still outstanding from 2017 that has not yet settled. That will go against the insurance that was in place in 2017.
Yeah, the
So
30
right
claims,
now it's only new one.
just not understanding that it's not 30 claims times the deductible. That's over a 5-year period. So you're really only looking at funding what we see on an annual basis, which if you divide 30 by 5 is what you're looking at from an annual basis. But again, not all of those claims are $50,000 plus claims. I mean, some of those things settle out for $8,000, $2,000, $12,000. Every now and then you run into the, $150,000, $200,000 claim. That's where the deductible is really going to be an issue, where it pays in full, but then the carrier is also contributing another $150,000 in those settlements. So usually you're averaging 1 or 2 of those a year. And I think that's where Mandy is pulling that number from.
Okay. So question about how does it compare to other communities within the area? Obviously everybody knows we manage Ballalago, and we had some significant increases in Ballalago. We did have some large claims over the last 18 months or so. It's been relatively quiet, and our renewal actually did remain pretty consistent. So, but Phil, can you explain some of your other communities, whether you're seeing increases and when you see decreases?
Yeah, I mean, I would tell you, if you look at us going into this year, I put out a big budget email every August to all of my community associations, and it's on a manager list that goes throughout the state. And you always project what you think is going to happen. And the projection for the last 3 years has been rate increases. But in 2020, we projected for 2021, I mean, it was the most significant rate increase that we projected in my 15. Well, you go back to really 2005 and 6 after the first wave of storms came through. It's been that long since we were throwing out that type of increase numbers. And we've really seen an average go beyond where that even was. I mean, most community associations have renewed in 2021, probably above where they budgeted. Now, granted, not in Solivita is unique. I mean, nothing's, you couldn't budget for this. No one would have budgeted for this. But if you're budgeting a 15-20% increase, that's what we're probably seeing on average out there, and some a lot more. You start getting into some of the condo associations with the older roofs and things like that, the premiums and increases can be a lot more significant. But when you look at associations that have had significant claim history on the liability side, absolutely 100, 200+% increases is happening out there, because we're losing carriers that write this. So if you go back again, like I was mentioning earlier, 5 or 6 years ago, Tower Hill, which was the carrier on this, wrote almost all the community associations in Florida. Philadelphia Insurance was another one. You had Westfield, Cincinnati, a few others, Coastal, Aspen. These were markets that wrote the majority of these HOAs. A lot of them have either left the market or they've made substantial underwriting changes to no longer write accounts with XYZ specs. And then that's what gets these things, it limits those markets that we would go to every day, and you get less carriers to choose from, and then they're, of course, more expensive. So it's a trend that's impacting everybody, but obviously with Solivita's loss history, it's more significant there.
Okay. Couple of questions about, are they all trip and falls? I have the document open in front of me for the loss runs. The majority are trip and falls, I'd say about 80 to 90%. But some of the other claims we've had has been vehicle damage. If the gate arms, the gate arm came down on a car, those are relatively small claims, but those have gone through liability. But I'd say 90, maybe even higher is a trip and fall. And they are on various different areas, in the street, on the sidewalk, coming from grass onto the roads. There really is no one place that they're happening more than others. Just go back to a quick other one, Phil. Can you explain, somebody's saying, why do they have to have D&O insurance if the developer is in control? It's outside of this, and that really hasn't changed, but if you can just explain. I know I've said before, state statute requires us to have certain insurance.
Yeah, the directors and officers insurance is not uncommon for associations that are even still developer controlled, or there's only a portion of the board that's owner controlled. Maybe in the very first few years, the developer is not purchasing D&O, but eventually every association does, because directors and officers is covering a different type of potential loss, and it's protecting not only the association, but the property management committee members. I mean, if you guys have, like you mentioned, the landscaping committee or architectural committee, whatever it might be, they are covered under that directors and officers policy as well. So it's not just the developer that you're protecting with that. A lot of you on this call are being protected with that. And again, the premium on that is, give or take $7,000, $8,000 a year. We're talking about, $550,000 in premium. So again, and especially since you're pending turnover, I mean, nobody should be sitting on this board without that coverage in the future either. So you need that.
Let me jump in real quick, Mandy, real quick. Just I've seen some of the comments too as well. You know, Solivita, we talked about it. Phil's talked about Mandy too. The size of it, the amount of sidewalks, you're just going to have more claims than say a smaller community. It's nature of the beast. In our smaller communities, we may get one claim every couple of years, but that's because they have not as much sidewalks. And there's not many homeowners and guests on property. The size of Solivita, they have it. Celebration, I do know, and I know Phil knows too as well. That's the one that's near you guys, is comparable in size. They have a claim history that's massive with all the street trees that are there too as well. And they're grinding and they're removing. So getting away from it, the solution that I feel, we've talked about different trees that possibly we could go back into and replant, but that's a multi-million dollar, you know, to go back in with a root friendlier tree to go back through and do that. But that's something right now the HOA and the developer as the board is not willing to look at. When it turns over resident control, as residents, you guys can definitely look into those options. But the biggest thing is awareness. I saw a couple of those chats. I love it. And we do cut roots, guys. When we go in there, we do cut roots on them. But they do grow right back. So you're going to see that. But the homeowner is going to have control here very soon. And like I said, it's going to be a problem you guys will be faced with in Solivita forever. It's not going away. I think it's just trying to get the word out. Don't sue your own association, because at the end of the day, you're suing yourself. And make sure people understand that, you know, and try to stay up on grinding and taking care of the sidewalks, which we've done. And we will give you guys a 10-year run of what we spent every year on sidewalk repairs. You can see we've been working through it, identifying and grinding and taking care of them. It's just every day they keep lifting. They're just lifting every day we're sitting here, they're lifting.
And then Craig, I would also say I've got the claim sheet in front of me, and I just want to give you guys some description of some of these claims so you can kind of get an idea of what we're talking about on the trip and fall. So just in 2020, so the last year, we had a trip and fall which resulted in a broken arm. We had a trip and fall that resulted in a broken nose. And we had a trip and fall that resulted in a broken wrist. So those were three, you know, broken bones on top of obviously a trip and fall. We've had other trip and falls where it was like, you know, maybe it was their back or something, but these were things that obviously were noted on here and claimed. In 2019, we've got, I'm just kind of looking through it again. We got, you know, dental work, neck, back, et cetera. But their big one from this year was a fractured femur. I mentioned that earlier, but that was one that caught my attention because that seems like that's pretty difficult to do on a raised sidewalk. But again, you got to think about who that person is and what happened. But I mean, that's $250,000 claim, right? So I mean, fractured femurs aren't easy to fix. Then you've got, you know, some head injuries in litigation, discovery, stuff like that. So just in the last 2 years, the amount of significant injuries, because that's what gets us back to, you know, did someone fall and they're not willing to go into surgery for it? That's usually not. But if someone's, you know, in surgery, gets taken away by a helicopter or it gets taken away by a, you know, ambulance or whatever it might be, and is an emergency surgery for trip and fall, it's very difficult to avoid payout on a claim like that. So I just want to make sure you know the nature of some of these. And again, I think it's just the number of people. You're talking about thousands of people on 60 miles of sidewalk. There's not an easy way to get your hands around it when you have communities of this size.
Yeah, and then just to follow up on that, there's a lot of chat about the deductible. If, you know, a claim's got to reach $50,000 before the insurance company will pay out. Phil and I had actually discussed this, that some of these smaller claims that the insurance company is settling right now for the, you know, $10,000 and $20,000, yes, those would end up being settled by the HOA paying, but that's going to end up hopefully decreasing your insurance going up, you know, in the long term, because you are actually going to be settling those. But that's the reason why we wanted to put in the contingency fund, that there's money there. And, you know, claims coming in, they vary. Some will settle within a year. Most of them are 18 months to 2 years to get to some kind of mediation and settlement. So there's time to build up that contingency fund to a number that is going to hopefully give you some cushion for these claims. But as education, we will make sure we'll get out, you know, some more e-blasts on this. We'll put something into the magazine this month. You know, Phil gives us some pretty good documents that we can use to continue to educate the homeowners that, you know, filing a claim is filing a claim against yourself. We've been saying this for a number of years, and I will say this time round, we are getting a lot more attention from the homeowners, that they're now seeing it. I mean, 100 and I think maximum we had 170 people on this call. So the message is getting out to the homeowners. If when you're walking the community, if you're having coffee with your neighbors, please let them know, you know, share this with them. We're going to put this out in a link to the homeowners so they can actually listen in, but share with them that, you know, yes, it's very unfortunate if somebody does have a slip and fall, but the first call should be medical, get yourself taken care of, not first call to the insurance, you know, an attorney. So
yeah, it's kind of interesting what we see lately. I had one the other day where we got the person who fell, took pictures of her while she was still on the ground. She has pictures from the ground and someone has pictures from above. It's like, that wasn't at Solivita, but I'm just kind of like, seems odd, right? Like you would think if you fell, your first concern would be getting up or taking care of your injuries. But that's the nature and kind of some of the stuff that we're seeing, unfortunately, which is difficult. But just to talk about the history here at Solivita a little bit, because I've seen some of these comments that may be a little more negative. I mean, I've been the agent here for 6 years. For 5 years, we've kept this thing by any stretch with the claims that you've had, anybody would agree, well below where the premium probably absolutely should have been. I mean, that's really what you've seen with this type of difference. There wasn't any gouging or increases that shouldn't have been there. For a community of Solivita size to be paying around $100 grand for insurance with this type of claim history, and that's really where you've been until this kind of basically broke this year. Maybe that was good and bad, and it was bad in some ways because obviously it's drastic, the difference. First, there being more of an overtime increase, but it's good in some ways because maybe it gets people's attention that it wouldn't have otherwise gotten. I mean, the fact that we have this many people on a call and we're dealing with it, it gets the word out so people understand. Because the more I keep it hidden in the background, if we were able to, and obviously would have continued to, we could, but you get to a point where it's just not sustainable. It's not possible. You just run out of options and you get into this spot. So, hopefully that helps with some understanding.
Hey, real quick, Rudy, on current TM phases that they're developing, they haven't been put it in sidewalks, correct? There's no sidewalks going in?
No, sir.
Yeah. So to answer that one question that came up, there is no sidewalks that are being installed by TM. And that was actually an AV Home decision a while back. They started that. Now TM has done that too. So all new phases don't have sidewalks. So those residents will be walking in the streets, which are owned by the HOA. So if there's a trip fall there, that claim will still come back. Guys, the ultimate solution to this, I will tell you, there are counties. I saw a comment on this too as well about the state. It's really a county requirement. Sarasota, West Palm, there's a couple southern counties that we work in that don't require street trees. They got away from that because they saw the liability. They saw the issues, burden to associations. Later on, down the road now, where we're 20 plus years into Solivita, you're seeing those issues pop up, and that's going to be an ongoing thing, guys. This will be a battle forever. The county needs to change that ordinance. In Polk County, Rudy, correct me if I'm wrong, it still is. When you develop a house, there needs to be a street tree, and that is a county requirement with Polk County. Osceola is the same way. So a lot of the counties that are around us, they're all the same. So any new development still needs a street tree. I'd love to get away, but it's going to take a lot of us to go to basically the counties and make those changes. So that's something basically getting a group of homeowners together to go to the counties and get those changes. The developers, believe me, they want it because they don't want those street trees there as well, but it is a requirement of the county. So you can blame AV Homes, Taylor Morrison, but that is a county requirement for all communities within the county.
And one thing I'll also mention, we had talked about this briefly, but there's a new way of handling some of these trip and falls that we're seeing come out of South Florida, where they're spraying this rubber substance over the area that has the issue around the tree roots and stuff like that. And it basically levels the area out over the concrete. I'm not sure if it looks the best. It's black in a lot of these scenarios, but it's rubber, and it can, without having to rip the sidewalk up, you spray this stuff above it. It makes it, obviously it's easier if someone tripped and fell, but it eliminates some of the trip hazards. So there's all kinds of things that people are looking at here. You're absolutely not alone in this scenario, but it is very frustrating. It's just, again, Solivita sticks out because I think of the size and of the amount of sidewalks, whereas most associations would be broke apart, right? There'd be maybe 4,000 or 5,000 home communities, which would be more manageable on an individual level than one at this size. So it's definitely an issue that's unique to Solivita.
All right, couple of things that I'm going to go through. So there's some comments on the budget. You know, we're under budget. There should be some savings in the budget to cover this increase. With the increase being over several $100,000 throughout the end of this year, there really wasn't that many savings. Believe me, we looked. We're not going to go into it in detail in this, but other vendors are increasing their scope of work. Floor lawn, we all know that this year it was voted in about the minimum wage. We're having issues with security companies getting people to work for the low wage that they were on. So those vendors are also looking at increases in their contracts. So we tried everything we could looking at the budget to try and alleviate this and not have this back onto the homeowners. But there really was no other solution. We did it as lightly as we possibly could. And I understand that several people are on fixed income and this is a huge increase for them. You know, sincerely apologize for that. Several are saying the developer should have paid. These streets are HOA streets. Developer has turned them over. So there isn't any way that they would actually go through and pick this up. A lot of comments on here about going to Polk County in droves and telling them about the street trees. Yeah, that's between yourselves and Polk County if you wish. So it's not Elm's reluctance to transfer the ownership to the sidewalks to the homeowner. We actually did this in Ballalago, a neighboring community, to the homeowners. That also brings up its additional risks. So with this size of a community, turning those over to the homeowners, we'd be on a longer call than a 2-hour Zoom call. So going to leave this open for another 5-10 minutes on the chat. Please continue to put your comments in there. Not going to close it down for a couple of minutes, but just to sum up, Craig, if you want to address again, we really took this very seriously. We feel that this is the right thing for the homeowners going forward. Control to the homeowners will happen end of this year. So we're looking to make sure that we set you guys up for success going forward. The easiest way for us to reduce that is educate on the slip and falls with the homeowners. We will continue to do that. We'll make sure something goes out in the newsletter every month, just increasing. Rudy will put together a spreadsheet on the amount that's been spent over the last 10 years in the community. We'll put together some detail on the loss runs without actually identifying individuals, so you can get an understanding of exactly where you're at for the last 5 years. And communication will be going out. You'll be getting statements for the assessment for the insurance. Please know that that's coming forward, and we're going to work with the board on no late fees will be applied for the insurance. But it's due to be paid. So we are hopefully, not going to end up with any delinquency on that.
Mandy, what's the amount? Because I see that question coming in.
It's $12.58 per unit per month. But a statement will be going out, and we're going to send a statement each month for those assessments to be paid. If you're on ACH with your current dues, you can continue those as normal. So there's been a lot of questions on that. And then on your homeowner portal, when you log into your account, you'll see those assessments starting to hit. Probably next week, they'll be uploaded.
And I would also say there's questions that are coming in a bunch of times about signaling or notifying the community of who these people are individually that are suing. And what I would just say to that is that you talk to your legal counsel for the association to run that by them. Obviously, that shouldn't be a decision that even Evergreen or myself or anybody could give you. You'd want a legal, decision and opinion on that, of whether you can disclose that information to the whole community that XYZ person sued the association. Again, I know it's public records. You can go in and find some of that stuff, but I just would caution you to make sure you're getting legal opinion on that before you did that. That would be
and one gentleman has asked the question several times about, large claims that are currently pending. The way, and Phil, if you can help me out on this one, the way that the claims work, somebody will make an initial claim and they'll put in what their current medical bills are. And that's kind of what the insurance company will put on a reserve. That's what they think if they were to pay it 100%. So right now from 2017, I currently have a claim of 120,000. Whether it will settle for 120,000, who knows? Are there additional things? It's still in discovery. It's still going through. And then I've got
the initial demand you get is stupid a lot of times. Like the demand will be $1 million for their trip and fall, right? And the carrier is not going to pay $1 million. So they only reserve what they think they'd actually end up, what the claim is going to be compensable for. And a lot of times you surround that around what the actual medical bills are, because it's really hard to avoid paying any medical bill, right? You're going to probably be paying medical plus, a factor on that. So that's what Mandy was getting to, is that, so if we have a $250,000 reserve on a claim, it's because they likely have significant medical bills and they spent time in the hospital. They may be demanding $1 million, but we're not necessarily putting $1 million reserve up. And again, that reserve, a decision on what amount they put there is coming from the carrier. So Mandy, Evergreen, Rudy, myself, none of us can influence that. The best we can try to do is that upon renewal, when we get into doing the renewals, if we see a large reserve that's sitting there for a longer period of time, we absolutely do push back on that and try to get the carrier to explain why they're doing it, because we don't want to see them putting up a crazy reserve and not ever reducing it, because it's hurting us from a loss perspective. So anything that's there from prior years, and really right now, there's only one large loss that's from 2017, for example, and that's the one that Mandy mentioned, which is a $105,000 reserve in the 2017 year, which we get on them about. There's no reserves for 2018, and then everything else is going to be 2019 or newer, which isn't uncommon. So really, there's only one claim that's more than 2 years old that's got a reserve on it, and that's, again, pending litigation, discovery. They're in the throes of court on that one.
Yeah, and then the 2019 to 2020 year, we currently have 350,000 sitting in reserves. From 2020 to 2021 policy, we currently have 227. I'm going to touch wood. We haven't had any claims since January of 2021, but that doesn't mean that there aren't coming in. We've had some incident reports completed, but we haven't yet, and hopefully the incident report is as far as it goes. We put the insurance on notice if we get an incident report, but we've not had anything filed with us since January.
Yeah, and I would tell people there's definitely a lag on this stuff. So like if you look at the last 7 months, we've actually been, again, knock on wood, things have been okay. It's just that doesn't really mean anything, because the stuff can pop. We'll get 3 lawsuits hit us in August for earlier this year. So it really takes a while to get past it. It kind of has a tail to this stuff. And unfortunately for y'all, you'll get popped with a claim from 2018 hits again. It can be frustrating, very difficult to guarantee that doesn't happen.
Yeah, and I apologize on the chat. Somebody just posted, too many of our inquiries are going unanswered. Currently, I'm at 152 chat. So I apologize if your individual question wasn't answered. As I said at the beginning, I am going to download the chat into a document, and then Rudy will work on that and answer as many of these questions that may have gone unanswered individually. So again, I apologize that your specific question may not have been read out, but we're doing our best to answer as many as we can.
If you didn't get your question answered during this call, just email that question, and then I'll have Mandy or Rudy can send it to me. I mean, I can't say they're all going to be insurance related. There may be management related questions, but any insurance related question you didn't get answered, I will answer it in writing and put it back to them so you guys can have it. So don't feel like we're not gonna not pay attention to you.
Yeah, and I know there are many questions. The lady keeps quoting, there are many questions that have gone unanswered. We are doing our best to answer as many as we can. So again, every single question will be answered, and we will put that into a document, and we will get that out to the community as soon as we possibly can. So just to sum up again, this is not an ideal situation. This is not something that Evergreen is doing to make money. This is not something the developer is doing to make money. This is not something that Phil is doing to make money. This is very unfortunate situation that we find ourselves in, and we will continue to work on, trying to limit the number of claims that we have, and to make sure that you as members of the HOA, you are protected, because rightly so, some people have made the comments, you are really suing yourself on these claims. I had someone come to me, well, my neighbor got $82,000. I think I should get mine. When a mediation is settled, they are sworn to secrecy and not to disclose that. But unfortunately, they then disclose. So if
And
you
what
can
percentage
educate,
you're actually getting is the other thing too. You see these big numbers on the TV ads, but then it's what went to attorneys, what was medical bills, what they
Yes.
actually clear in their pocket. So some of that can be deceiving.
yeah, usually at least a third is going to the attorney, sometimes even more. So again, thank you for your time today. We do appreciate it. I am going to leave the chat open for another couple of minutes. I'm not going to close the meeting down. I'm going to continue the recording going until the last person leaves the room. But thank you for your time, Phil. Thank you for your time today. I know this is not an ideal situation that we find ourselves in, but thank you again for your expertise.
No, yeah, and then thank you, you guys and everybody on this call. I know it's frustrating, guys. Like I said, I sit on several boards, but represent a bunch of them, and not something that you want to see happen ever. And from my standpoint, for anybody who needs some of these comments, where we make money or live a good life or whatever you say as an insurance agent is, I want things to be as consistent as possible, make it as easy as possible. What we had to go through to renew Solivita this year is it's not something you want to do. You'd rather there be no claims, make it an easy renewal. That's where our goal is on every one of our accounts. We don't have to want to go here and get into this spot. It definitely doesn't make our lives easier, trust me. So not something that we would want to happen. So hopefully it gets resolved and we get back to normal for Solivita.
All righty, and a question just came out about why was your board member not on this call? Unfortunately, your board member is dealing with a family emergency today, so was not able to be in attendance. So thank you again for your time. Sorry to be the bearer of bad news. It's not something that we enjoy doing, but we will make sure we keep you as informed as we can. We'll get all of the documentation out to you. It will probably be hopefully by the end of this week, but it may be into next week because there's a lot of messages to go through. So thank you again for your time. Have a wonderful Solivita day, and please be safe and be mindful when you're walking, where you're walking, and please pay attention. So thank you, everybody.
Thank you,
have a
guys.
wonderful day.